Imagine waking up every single day, working harder than your parents ever did, earning what should be considered a decent salary in one of the richest countries on earth, yet realizing that owning even a small house has become almost impossible. That is the reality for millions of Americans today. A country once famous for the American dream is now watching that dream slowly disappear. In the 1970s, a normal middle-class family could buy a home with one income, support children, own a car, and still save money. Today, even couples earning over $100,000 a year struggle to afford tiny apartments, while houses that used to cost $80,000 now sell for over $800,000. So what happened? Why can't Americans afford homes anymore? Is it because people stopped working hard? Is it because homes became more luxurious? Or is something much bigger happening behind the scenes? In this video, we're going to uncover the real reasons why homeownership in America is collapsing, how billion-dollar corporations are changing the housing market forever, why salaries can't keep up with prices, and what this means for the future of an entire generation. And trust me, by the end of this video, you'll understand why millions of Americans are starting to believe the American dream was never designed for them in the first place. To understand this crisis, we first need to go back in time. After World War II, America experienced one of the greatest economic booms in history. Factories were booming, jobs were stable, and wages were rising quickly. The government invested heavily in infrastructure, suburbs expanded rapidly, and banks offered affordable mortgages to ordinary families. Buying a home wasn't considered a luxury, it was normal. A factory worker, teacher, or truck driver could realistically buy a house in their 20s or 30s. Homes were cheap relative to income. In 1970, the average American home cost around $23,000, while the average yearly income was around $9,000. That means homes cost about 2 to 3 times the average salary. Today, in many cities, homes cost 8 to 10 times the average income. Think about how insane that difference is. Salaries increased slowly, but home prices exploded. And that explosion didn't happen by accident. One of the biggest reasons Americans can't afford homes anymore is simple. Wages stopped keeping up with inflation. For decades, productivity increased massively. Workers became more efficient, companies made more profits, technology advanced faster than ever before, yet average wages barely moved. In other words, Americans were producing more value than ever before, but they weren't getting paid proportionally more. Meanwhile, everything else became more expensive. Healthcare costs exploded, education costs exploded, rent exploded, food prices increased, transportation became expensive, and home prices, they went completely out of control. Today, the average house price in many major cities is so high that even people with good jobs can't qualify for mortgages. Young Americans are delaying marriage, delaying children, and sometimes living with roommates into their 30s simply because housing is unaffordable. But salaries alone don't explain everything. Another major reason is that America stopped building enough homes. For years, demand kept rising while supply stayed limited. More people wanted homes, but fewer homes were being built. In many cities, strict zoning laws made construction extremely difficult. Entire neighborhoods were designed only for single-family houses, meaning developers couldn't build apartments or affordable housing even if they wanted to. Local residents often opposed new developments because they feared traffic, lower property values, or changes to their communities. This created a housing shortage across America, and whenever supply is low and demand is high, prices skyrocket. But then something even worse happened. Giant corporations entered the housing market. Companies worth billions of dollars started buying thousands of homes across America, often paying cash. Imagine trying to compete against a corporation that can instantly outbid you without even needing a mortgage. Regular families never had a chance.
These investment firms realized houses could become extremely profitable assets. They bought homes, turned them into rentals, and made massive profits, while ordinary Americans were pushed out of the market. In some neighborhoods, corporations own huge portions of residential homes. The result? Fewer houses available for actual families to buy, which pushes prices even higher. And if that wasn't bad enough, interest rates changed everything. During the pandemic, interest rates were extremely low. Borrowing money became cheap, so millions of people rushed to buy homes. Prices surged because demand exploded overnight. But then inflation hit hard, and the Federal Reserve raised interest rates aggressively. Suddenly, mortgage payments became dramatically more expensive. A house that seemed affordable 2 years ago became impossible to buy today. Even if home prices stopped rising, monthly payments became unbearable because of higher interest rates. This trapped millions of Americans in a nightmare situation. Sellers don't want to sell because they already have low mortgage rates from previous years, while buyers can't afford current rates. The housing market became frozen. But there's another reason nobody talks about enough. Homes are no longer treated mainly as places to live. They're treated as investments. For decades, Americans were told that buying property was the ultimate way to build wealth. As a result, people began treating houses like stocks. Investors bought second homes, third homes, vacation homes, Airbnb properties, and rental units purely to make money. This financialization of housing transformed the market completely. When homes become investment vehicles instead of shelter, prices stop reflecting what ordinary people can afford. Instead, prices reflect what investors are willing to pay for future profits. That's why many cities now feel impossible to live in unless you're already wealthy. Cities like San Francisco, New York, Los Angeles, Miami, and Austin saw massive waves of tech wealth and investment money flow into real estate. Local workers simply couldn't compete anymore. Teachers, nurses, and firefighters found themselves priced out of the communities they serve. Some now commute hours every day because they can't afford housing near their jobs. And social media made things even worse psychologically. Platforms filled with luxury apartments, dream homes, and millionaire lifestyles created intense pressure on young people. Many Americans now feel like failures if they don't own property by a certain age, even though the economic system itself has changed dramatically. Previous generations bought homes during entirely different economic conditions, but today's young adults are often blamed for problems they didn't create. People say things like stop buying coffee or work harder, but the math simply doesn't work anymore. In many areas, saving for a down payment could take over a decade, even with disciplined budgeting. And while young Americans struggle, older homeowners who bought decades ago saw their wealth increase massively. This created one of the biggest generational wealth gaps in modern history. Many older Americans built enormous equity because they entered the market before prices exploded, while younger generations face barriers unlike anything seen before. And now there's growing fear that the situation may never improve. Some experts believe America is entering a future where permanent renting becomes normal. Imagine a country where fewer and fewer people own homes, while giant corporations control more and more housing. That would fundamentally change society. Homeownership has long been tied to stability, family wealth, retirement security, and upward mobility. But without it, millions of people could remain financially fragile for their entire lives. But perhaps the scariest part of this crisis is what it reveals about the economy itself. Housing is not just about buildings, it reflects deeper problems. When ordinary workers can no longer afford basic necessities despite working full-time, something is fundamentally broken. The gap between rich and poor has widened dramatically over the last several decades. The wealthiest Americans accumulated enormous fortunes through stocks, assets, and real estate, while middle-class wages stagnated. Housing became one of the clearest examples of inequality in America. Some people own multiple properties, while others can barely afford rent. Some investors make millions from rising home values, while first-time buyers lose hope entirely. And this frustration is growing. Across social media, interviews, and public discussions, young Americans increasingly express anger towards the system. Many feel betrayed. They followed the rules, they studied hard, got degrees, found jobs, and still can't achieve the same milestones their parents achieved with far less effort. This growing sense of hopelessness is changing how an entire generation thinks about work, money, and the future. Some are leaving expensive cities entirely, others are moving back with parents, some are giving up on ownership forever, and many are asking a painful question: if the American dream is no longer attainable, what replaces it? But despite all this, there are still people fighting for solutions. Some cities are trying to build more affordable housing. Some politicians want stricter rules on corporate home buying. Others argue for zoning reform, better public transportation, lower construction barriers, and policies designed to increase supply. Technology may also change housing in the future through modular homes, prefab construction, and cheaper building methods. But these changes will take time, and for millions of Americans,